No, no, I don't need to.
You don't? Okay.
Hey, can everybody hear me? Okay, great. You see the slides okay? All right, terrific. I really appreciate it, Lee. Uh, uh, um, uh, uh, Sorry, I'm just a little frazzled for getting this up and running. Listen, I really appreciate everybody for giving me their time this afternoon. And what I'm going to be uh, reviewing is our market internals Dominator trading system. It has just been performing outstanding. Uh, you're going to see an analysis that is totally unique and different than anything I believe that you've ever seen before. Now, this quick disclaimer that all signals and trading opportunities that we provide are for educational demonstration purposes only. Everyone should understand that trading involves risk and that a person can lose a substantial amount of money. Always carefully consider your financial position prior to trading and never risk more than you can afford to lose. Now, we all trade our live money, real money portfolios, but it's important for you to understand that we are providing educational material. Now, the presentation is going to last no more than 45 minutes, and I would encourage you to stay to the end. We're going to provide you with a lot of additional software at an extremely discounted price. We always like to give our traders from Traders Corner a really, really advantageous offer. So the whole bundle is really going to come in at a significant discount. Now, I've been day trading and swing trading for over 10 and a half years. And in all that time, I have found that there are three key things that you need to create trading success. Now, the first thing is you need is software that provides you with a competitive edge over all other traders. Now, the traders that we're looking to beat are the small retail traders like ourselves. And the edge that the software provides us with is it always tracks the directional flow of big institutional money. We have to make the big institutions our ally, and we have to look to run over all the other small retail traders that are present in the trade and trading in the wrong direction. Now, we also need etched in stone rules to follow. The less discretion we have on a trade, the better our equity curve will turn out. And you're going to see our entries and exits are all very clear cut. Now, I'm going to break the system down. This is not a long presentation, but it's a very, very unique and powerful system, one that we use in our live trading room in front of 550 traders every single morning. Now, just a really quick synopsis of my background. I graduated from an Ivy League university. I went to the University of Pennsylvania for 8 years, and I majored in applied mathematics. Within this field, I focused on mathematical modeling. I did mathematical modeling for the U.S. Navy. I optimized their underwater decompression schedules. Along with my mentor, I made it safer for deep Navy divers. When I turned that work into the U.S. Navy, I was awarded my diploma with special distinction. I graduated in the top 2% of my class, summa cum laude with honors. And after I finished my training, I was inducted into the Phi Beta Kappa Honor Society. Now, it was always my goal to go into academics and just do teaching and research. And so when I finished my training, I applied to a number of universities and wound up staying in Philadelphia as a full-time professor at Thomas Jefferson University. While there, I published 15 peer-reviewed articles in top-tier journals. I taught an enormous number of undergraduate and graduate students. I've always had the mindset of a scientist, a teacher, and an academician. I have been an invited speaker internationally in many countries and domestically in many, many cities. Last place was Dallas, Fort Worth, and the invitations have just died off post-COVID, but I've really been to many places. Now, ultimately, I needed to leave Jefferson. You know, life threw me a curveball. And I'm going to talk to you a little bit about that later in the presentation. Now, I estimate that I've mentored close to 30,000 traders. I just gave them a master class where we did a really heavy-duty educational session only for the members of my trading family yesterday, and we had about 200 traders attend. Now, the way the market exists today, there may be tens of thousands of small retail traders, which are all these small marbles present in the market at any given time. Now, they and us, we trade a small number of contracts, a small number of shares of stock. We do not have the ability to create a sustained trend. When we are present alone in the market, all we do is create chop. And the markets are absolutely ruled with an iron fist by the large institutional entities. When they step in, 95% of their trades are computer generated, they're algorithmic, many of them are high frequency trades, they leverage millions of dollars. If they believe that crude oil is undervalued, they press that computer, they hit that button on the computer, crude oil is going to rise in price. They believe advanced micro devices is overvalued, they are going to knock it down. The only way that we can make money in today's market is to ride the coattails of big institutional money in the direction they set. And we're going to talk a little bit more about what big institutional money does, but we must trade in the same direction that they're moving. Now, who are these big entities? They could be a big bank like HSBC, Bank of America, Deutsche Bank. They could be a 401k, they could be a mutual fund, they could be a hedge fund, they could be big Wall Street money like JP Morgan or Goldman Sachs. There are hundreds of other banks, hundreds of other institutions. It's really important for us to understand that they run the markets. And we are just bystanders who must trade in the direction they set. Now, everybody uses price action, MACD, LU wave, divergence, scan, Fibonacci, and price patterns. Essentially, that comprises pretty much what 95 to 98% of all day traders and swing traders use. Now, most of these analyses have been around for 50 years, a lot of them for 100 years. And just about 2 weeks ago, I read an article in Yahoo Finance. And Yahoo Finance did an analysis of a huge number of small retail traders like us. They tracked them for a significant period of time, found that after 6 months, 95% of us had given up. And on balance, they blew 9 separate trading accounts. So all the things that you're looking at is what these small retail traders use to on balance, run their accounts to zero on 9 separate occasions. Now, what forms price patterns? What forms rising triangles and falling triangles? What creates the movement of a MACD or Elliott wave or divergence is big institutional money. That is the primary force that generates the that you're looking at here. So we're looking at the market at a much more fundamental level. These analyses are the result of what we're looking at. So we want to look directly at this force. Now, if we look at this slide, we know that price is rising. But we have no idea why it's rising. Now, the MACD off the trading chart, analyzing data from our trading chart, has absolutely no future predictive value whatsoever. It's a mathematical axiom that if any indicator uses data from the trading chart on the right edge, it is valueless. So I see all these traders with lots and lots of indicators below their chart, all using data from the trading chart, and I know they have absolutely no idea what's going to happen off the right edge. Now, we need to know why price is rising, not just observing that price is rising. And in order to do that, we have to go deeper than price. We have to essentially look at the DNA of the market and determine, is big institutional money pressing price to the upside? And we have to know exactly when they step aside so that we can step aside on the trade. And no MACD crossover, no oscillator divergence signal is ever going to have any predictive power in determining when that's going to happen. So what we're really doing with all these indicator analyses, price patterns, divergence signals, is we're using a magnifying glass to sort of hone in and get a better look at the superficial layer of the market. We can see and track better that price is moving to the upside, but we don't know anything about the fundamental force that's driving price to the upside, so we are clueless off the right edge of the chart. What we need to do is take a microscopic view deep into the market and determine what is driving price to the upside. If we know that, then we can determine how far the price is going to go and when to step aside. So we want to move from passive observer, which is really what all these indicators allow us to be, nothing more than more sophisticated passive observers, to gaining tremendous predictive power off the right edge and determine the future direction of price. And we do this with tremendous precision. We track the directional flow of big institutional money. That is the prime force that moves price on any time frame and in every market that is present. Now, what creates a rising triangle? Big institutional money. Falling triangle, big institutional money. What creates these Fibonacci patterns? Big institutional money. If we're looking at big institutional money, we're looking at a level that's much deeper than what everybody else is looking at. Now, the way we do it is, and I can actually show you this off a live chart. Now, the market's closed, so this data is going to stop streaming. This was today. Whoops, I just lost the slide. Let me get it back. Here it is. I'm sorry. Let me pull it right here. Now, what we're going to do is we're going to look at all the stocks on the Dow, Nasdaq, New York Stock Exchange, Russell, and S&P 500. On balance, that's 2,700 stocks. And we're going to look at the ratio of stocks that are moving on up volume to the ratio to down volume. And we're going to look at the ratio of stocks moving on the uptick to stocks moving on the downtick on all 2,700 stocks on the S&P Russell, Nasdaq, New York Stock Exchange, and the Dow. That's going to tell us the direction that big institutional money is pressing price. I'm going to show you how our analysis does that. Let me take this slide away. I like to look at this as the markets are moving, but this data is simply not in usable form. And this is what it took us 2.5 years to harness. So let me just move from the current slide and swap it out. Now, let's just take the S&P 500 as an example. Now, we know that there are 500 stocks. Now, if the ratio of stocks moving on uptick to down, I'm sorry, to up volume to down volume is appreciably greater than 1, and the ratio of stocks moving on the uptick to downtick is appreciably greater than 1, this is what we might see. 400 stocks moving on uptick and up volume, 100 stocks moving on downtick and down volume. Now, in order to create a statistically significant imbalance this great, now that analysis has to be at least one standard deviation away from the mean. And if it is across 2,700 stocks, we know the likelihood of an up close on our present candle is tremendously high. We have gained the insight that we want. Now, just the reverse. If the ratio of stocks moving on down volume, or uptick to down, up volume to down, I'm sorry, I'm confusing myself here. The ratio of stocks moving on up volume to down volume is appreciably less than 1, and the ratio of stocks moving on uptick to downtick is also appreciably less than 1. What we have is the majority of stocks moving on down volume and downtick across 2,700 stocks. Now, on the S&P, we may have 100 on up volume and uptick, but 400 on down volume and downtick. Now, this kind of imbalance in this ratio can only be created by big institutional money. This is a radically, statistically significant imbalance. Now, the indicator algorithm is going to determine the statistical significance of every imbalance. So it does all the heavy lifting for us across 2,700 stocks. So when the ratio of stocks across 2,700 are moving predominantly on up volume and uptick, this ratio is much greater than 1. The signal's going to come below the candle, denoting the candle is almost always going to close to the upside. Way over 90% of these candles will close to the upside. Now, the signal will come in at the first tick or the first cent of the candle, and this is a very stable signal. Now, you're not going to trade this anyway until the candle closes. I just don't trade intra-candle. I think it's a big mistake to trade intra-candle. I don't want to give you a trade methodology, but this is tremendously likely to trade to the upside. Just the reverse. When stocks are moving on a predominance of down volume and down tick, this ratio is way appreciably less than 1 across 2,700 stocks and 5 markets. We're going to get that signal above the candle. Now, I'm going to show you live charts as well as my JPEGs so you're getting a real good feel for the market. Now, what we had initially done was segregate these stocks by market. And we denoted the Dow in green, NYSE red, Nasdaq blue, Russell yellow, and the S&P 500 light blue, or if you want to characterize it as cyan, doesn't matter. And when you got a 4-box signal, E-mini, Dow, Russell, Nasdaq, all with that massive imbalance, moving on up volume and uptick, this candle is going to close to the upside. If you're trading a stock, especially say the Qs or the SPY, you're going to get an up close. Not 100% of the time, but 95% of the time or greater. Now, this is going to kick in right at the inception of candle creation, and likely it's going to have the stability to not change. You can only ensure that at candle close when you take the trade. Just the reverse. We've got a 4-market signal, Dow, E-mini, Russell, and Nasdaq, all trading on a tremendous overabundance of down ticking on down volume stocks. We're analyzing essentially what big institutional money is doing. It's driving stocks across 2,700 stocks across, in this case, 4 markets. To the downside, we're going to trade short. The only box missing is the New York Stock Exchange, and that is a red color. But this is all rendered irrelevant by our 2.0 version of our software. Now, I wanted to show you our initial software rollout. Now, this is a 2-box entry. It's a very powerful entry. Yellow is the Russell, and blue is the S&P 500. That's a lot of stocks ticking on up volume. But you're trading appreciably off support. Wait till price retraces to support. 4-box entry, S&P, Russell, Nasdaq, E-mini. Up we go. Comes back to support. You can add a contract. This is the Nasdaq. And then it just flies to the upside. We're going to close the trade. We don't hold anything overnight on futures. Now, we actually got 135 points on the trade. I scaled it 148.5 accidentally because I pushed it past 6 o'clock. At 4 p.m. Eastern, we closed the trade. But this allowed too much discretion. People were worried about, do I need a 3-box? Do I need a 4-box? Do I need my market? So what we did is we changed it to an analysis across 2,700 stocks. The analysis that we provide is more granular, and so it is more powerful. So these individual colors become irrelevant. And what we're looking at now is a composite signal of all the markets in the aggregate. The Dow, the New York Stock Exchange, the Nasdaq, the Russell, and the S&P. And when all stocks on all these markets are moving on a tremendous overabundance of up volume, on uptick, the ratio is going to be appreciably greater than 1. The system is going to determine the imbalance, whether it's statistically significant. If it is, we're going to get an up triangle. If the reverse is true, that those 2,700 stocks are moving on a predominance of down volume on the downtick, we're going to get a down triangle. Now that's going to tell us what big institutional money is doing with stocks. I mean, if it's driving 2,700 stocks across 5 separate markets to the downside, you and I, as small retail traders, could never create this kind of an imbalance. We're just going to have that ratio hanging around 1, where up volume and down volume are about the same, uptick and downtick are about the same, and it's going to sort of wobble around that mean. We essentially are going to put the markets in chop. Big institutional money is going to come in and slam those 2,700 stocks to the downside or to the upside, and we're going to know the direction we have to trade. Now, this is the first software analysis in history, and I say in history with a caveat, because it's the only software I have personally seen that ever creates an indicator analysis that is completely dissociated from price. That's the optimal type of entry you want. You don't want the open, high, low, close of anything on your chart to drive price. To drive the indicator analysis. The uptick, downtick imbalance has absolutely no idea what is happening with price on your trading chart. So you have 2 completely independent assessments. One is price direction, and the other are the market internals. And they are completely independent assessments. Everything else is dependent upon price movement. This doesn't care about price movement because this is what creates price movement. So I'm going to show you some trades. There's the 10 lines. This is the only slide I'm going to show these 10 lines because 5 of them are volume, 5 of them are tick, and when there's a tremendous over imbalance, we're going to get green. We don't look at these because to take a crosshair across these and make an assessment when we want to look at maybe 400 stocks for an optimal entry is absurd. So I just wanted to show you the analysis that's going on. We're going to take these lines off the chart, and we're just going to look at these triangles. These triangles tell us that we have a tremendous tremendous imbalance of stocks moving on the uptick, on up volume. We take an entry off support, it comes back to support. I would trade a future here. I would buy another call. It's going to move up, and we're going to get a nice 88% win on a weekly option. Now here's Netflix, same thing. We want this green background. That's the multi-time frame alignment and trend to the upside. And we do want an alignment trend, and we do place tremendous respect on market structure. Market structure here is defined by our 50 EMA with EMA smoothing. This is a proprietary line we created here in the office. This is a 15-period EMA with EMA smoothing. It moves differently than any other line out there. You come back to support, you take the trade. Already the trade's in your favor because you're trading in the multi-time frame direction. Now this is a 5-minute. It's looking at the 15-minute and the 45-minute. And on the 15 and 45, the 15 has crossed the 50 to the upside, the 50 is green, and the 15 is green. So we already tilt the trade in our direction. In addition now, we have the market internals signaling a tremendous over imbalance of stocks moving on uptick and up volume. Now, Netflix is going to trade along with that same basket. Now, Netflix is going to have a relative strength, and you want to trade a stock with tremendous relative strength so that it's going to be swept up higher. Now, the one thing that you can see here is the close of the session. Now, remember, this is an option, so you can hold overnight here. You do not have to close. Futures, you're going to close. An option, if we take a weekly, we're going to hold here. And the next candle in the following session is a huge up candle on that market on the market internals imbalance. Another imbalance, another imbalance, another imbalance. So we drive price all the way up to here. As this candle forms, we immediately see that we have no market imbalance signal. You exit the trade, that's 143% on Netflix. It's a very clear-cut system to trade. Now here's the SPY. We get great trades on the SPY. We've got to wait to a pullback into resistance. Can't just take a floating candle that's way off. Remember, market structure is important. We're set up perfectly. We've got the 50 down, the 15 down, 15's crossed the 50. We have a multi-time frame alignment and trend to the downside, but now we need an optimal entry. Shorts always come right off resistance. Here's your entry. It's going to drift right back to resistance, but it's lower. You can add a contract here. You're trading the SPY. I personally didn't because I took this trade with a lot of contracts initially. Not going to add one on. Went further down. We lost the market internal signal, closed the trade, and made 92% on the weekly. Now here's Tesla. Awesome trade. Enter here. You can enter here. If you entered here, you can add on here another contract. You'll hold into the close, and then it makes a huge jump in the morning on the following day. with no market internal signal. On that big jump to the upside, you're out of the trade. That's 164%. We got a huge increase in implied volatility on the gap up, and that was a very lucrative trade. Now here's Tesla. I couldn't resist because it was too pretty a trade not to show. Here's a gorgeous trade to the downside, right off of resistance, and this trade just collapses like, it's gone. Now, as soon as you lose the market internal signal, you're gone. So it does make an up close on a down triangle. You stay in, but then the next candle you're out. That was 101% on an at the money call. Now, on futures, I'm telling you this thing is absolutely busting the market. Now, we're going to take this trade long as we have the market internal signal. We know this is a retracement and not a change in direction. Now, I know somebody just released an indicator that's supposed to tell you the difference between a bear trap and a pullback or a change in direction. Well, this is the best way to know. If the market internals remain in your favor, this is a pullback generated by small retail traders who have no clue what they're doing. Big institutional money is still creating tremendous up pressure. We stay in the trade, ride it to the upside, and close it at the session close. This was 16.5 points on a 2-unit Renko. Here's the Nasdaq. The cyan background's a little weaker, but it's a good color to enter. Perfect market structure. 50-15, really nice. Move right to the upside. This was a 35.5 point trade. We multiply that by 4. That's 140 ticks. Here's a 4 uni on the Russell. As long as we have the internals, this is going to be a retracement, not a reversal. We stay in the trade, and up it goes. Stay in the trade, up it goes. We lose the internals, we're out. It's 17.5 points. Looks like it should be more, but remember, now we're trading a 4 uni, not an 8 uni. Now, this is a 4 uni on the YM. There's your perfect entry. Now, blue is a little bit risky a background. It's a multi-time frame alignment to the upside. I don't really have the time. Traders Corner will time me out. If I went into how these different colors are generated, if you waited to take the trade until it turned green, no harm, no foul. But if you got in with understanding that this is a riskier entry, pullback, no big deal. Pullback, no big deal. Market internals, stay with the trade. Take it. Here, you lose your internals. That's 128 ticks on the YM. Now, I wanted to show you that you can trade the micros. Here's an 82.5 point on the micros. Small 1 candle retracement, 2 candle retracement. Market internals all the way to the upside. Up, 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 up we go. Close right here. Now, I believe this is the most powerful software and trading methodology available to the small retail trader. I have seen nothing more powerful than this system. Now, I'm going to go through the slides, then I'm going to answer questions, and I'm going to show you some live chart trades.
For provided me with all the charts and the software that I bring.
Changed my life. One of the best.
This is a college student.
Amazing
This
software.
is from a man from Australia.
Has made it easier.
Miami Chamber
Mark
of
and
Commerce.
his team are always
To trade.
This is a minister I've been friends with for 25 years. He has a congregation in Broward County. He's been one of my best friends. He came aboard about 7 months ago. He is just doing amazingly well. You know, if he gave us a video testimonial, that he's genuine. This guy wouldn't tell a lie if you applied thumb screws to him. He's a really honest, upright man. Now, the workspace is very intuitive. It's very easy to learn, but we're going to back it up with an enormous amount of education. Works on any account size. Now, remember, on the futures, you can just trade the Dow, the Russell, the Nasdaq, and the S&P 500, but is no way is that a constraint. If you get 2 to 3 perfect trades per market per week, so on balance, you're going to get 10 to 15 perfect entries, you're going to do incredibly well. If your predisposition is to trade options on stocks, this is going to call their direction with really tremendous precision. Now, trading success does equal financial freedom. I don't want to go into the whole, this has become cliched at this point. You work from home, you can work in your underwear, you can roll out of bed. It's a blessing if you can trade successfully. I'm telling you, this software works. We trade it with our own money every morning, and that's a very, very rare circumstance. In fact, I don't know of another situation where somebody's going to offer you a software program, bring you into a live trading room, and then trade their own money on it. That, I think, speaks for itself in terms of my belief that this is a tremendous way to add to my account. Now, just wanted to tell you real briefly, that's me, that's my son. He's a little bit of an older slide. He's an older boy now. But I'm not just a single dad, I'm a solo dad. I raised this boy by myself. I used to wake him up at 6 o'clock in the morning, take him to school by 7, pick him up at 3. I did 25 loads of laundry, helped him with his homework, and chauffeur him around on the weekends. This is my second season of coaching him in Little League Baseball, my second of 3. Nothing would allow me to be the kind of hands-on dad that I wanted to be if it wasn't for the time. Time is just something, I have a lot of time flexibility. I mean, I can do what I want apart from the hour or hour and a half that I spend trading. Otherwise, I can be there for my son. And that's really important to me. And if it's an emergency, I won't trade. But the people who help me out the most are the people in the office. And they're all in his contact request sheet, and they can all pick them up for me. Now, here's the market internals Dominator. You get the 5 predictive sequences, and we're going to throw in a lot of bonuses. Now, if you are not making good money, if you're having difficulty trading, if some days you make money, other days you lose money, if you just can't gain traction, you're blowing accounts, you're giving up your money to other small retail traders, which I consider personally to be a sin, why should other small retail traders take money out of your account? And you don't want to give money to the other big institutions. They're already billion-dollar entities. So you want to trade with them. And if you're not doing that now, this is your opportunity. I'm telling you, you're going to come out of the box tomorrow, and the way you trade is not going to change. Now, I just want to give you a quick story. When I left Jefferson and I decided to go into trading, I could have applied for a job at the University of Miami as a professor, but I decided to go into trading. I felt my background in mathematics would lend itself well to understanding price mechanics. I bought a piece of software that cost me $17,000. I could not pay by credit card or by check. I had to wire the money. I got the software and traded it and lost an enormous amount of money. And every single time I called up for educational support. They told me it was my fault, that I didn't know what I was doing. And they put the whole burden of failure on my shoulders. I'm telling you, if you are not trading successfully, it's likely that the software you're trading doesn't work, or the trading methodology you're using doesn't work. Because ultimately, I sat for 2 years and engineered my own software. I took no trades. I did nothing. I spent 24 months working with a programmer and created my own software. And when I look back at what I had purchased for 17 grand, I had purchased a flawed system that would have never made me money. So chances are, if you're not successful, it is not your fault. It's simply you're not trading with the right tools. I mean, you can't build a house unless you have a really great system, a great array of tools in front of you, and we're going to provide them. And I do urge you to take action today, because I believe that tomorrow in the live trading room, you're gonna be awakened to a whole new financial horizon and see how well this system works, how we trade it live with our own money, and how we are very, very successful. We make money 8 to 9 out of every 10 trading sessions. Now, in terms of our educational support, you know, you go to 99.9% of these other companies, you listen to the webinar, you call the number that's on the screen. A, most of them are pre-recorded, and B, you call the number and you get a call center located in someplace in the country, or it's located in the Philippines, or it's located in Thailand, or it's located somewhere outside the country. So you try to ask them for educational support. They're not going to be able to help you. And that's the number that's attached all the time. I mean, try to get through to the guy that gives the webinar, forget it. Sergio, Rory, myself, we are all here to help you trade. You call, we are all eminently available. We will work with you. You hit a speed bump, I'll work with you one-on-one. We do the master classes every Wednesday. We get to talk together. You tell me any problems that you have, I will walk you through them. Ultimately, if you need a one-on-one trading session to work out a speed bump, I will work with you one-on-one. I have no problem. I don't charge you any money for that, because I know at the end of the day, this software works, and I can't impress that fact upon you anymore, any more strongly than I'm doing now. This is effective software. But I do believe that you need a lot of education. And the more education you get, the better trader that you will be. You know, it's like the practice of medicine. You're always practicing, you're never perfect, and you can always use additional training. Every Wednesday, you're going to have a long, long educational session, and every trading session, we do a lot of teaching if we hit our profit target. Now, for the first 10, actually, it's not the 10 traders who come aboard in this offer. Now, normally the software is $11.97 for lifetime, but for today only, if you put the discount code DOM at checkout, you're going to get $200 off. So for $9.97, you get lifetime ownership of the software. You will never pay us another penny again. We're already working on our 2.0 version. We'll eventually have a 3.0 version. Remember that the linchpin of mathematical modeling is that your software is never perfect. It constantly needs to go an evolutionary process to make it better and better. We've been optimizing software for 10 and a half years, and we will continue to do so. Whatever we give you, and the system we're going to give you is awesome, we're going to look to make it better. Now, I don't have a market scanner up, but the market scanner, which is normally a standalone for $9.97, if you buy today, is yours also for life, and you pay no additional amount of money. It's $9.97 as a one-time purchase. Now, if you want to trade stocks and you want those perfect entries, it adheres to market structural rules. So it's going to provide you with the best entries. You can track 800 stocks on any time frame that you want. You set the time frame. You set the kind of candle you want to trade. You want to trade a 5-minute, 15-minute. You want to swing trade on a half an hour. That's up to you. Everyone's going to get the live master classes. And like I said, all upgrades and add-ons are yours. So what I'm going to do is I'm going to drop the slides a little bit. And we're going to look at a few of the, where I can't find my slide. Here it is. And we're going to look at some of the markets today. And first, let me open up for questions. Hey, good morning, everyone. Or good afternoon, I should say, at this point. Let me just go up. I don't want to answer questions from Lee. And Lee's a wonderful guy. I really, really like Lee. Very credible, very honest, very open. Okay, here we go. This is for Lee. So let me start. Stephanie, we have different rooms. We have 3 live trading rooms so that you're going to be able to pick what you want to trade. We have one trading room that trades futures. We have one trading room that trades stocks and options. David Weiss is an unbelievably effective options trader. He day trades options. So you are not going to hold, for the most part, overnight. And then we have David Kushner, who trades crude and gold. So you can pick which room you want, and basically you can move from room to room to room. We're going to give you 3 live links. You pick the room you want to trade. It's totally up to you. So essentially, now remember, the Dominator system will not be active on crude and gold. We will use our money flow system, but you're still going to be able to trade it because we're going to combine these systems. But you're going to pick whatever you want to trade, and you're going to pick the trading room you want to go into. Hey, Hubert. Greg Capra invited me to this episode of Trader's Corner, which is how I found out about it. Hang on. Sure, Hubert. Rory's watching, and he is going to do that for you. Okay? Hey, Jeff. How do you handle trades that you cannot close when your software tries? Well, listen, Jeff, that's a software glitch. That is not a, if you try to close a trade and your software won't close it, that's a problem with your software. That's independent of our signal system. I mean, maybe Sergio can help you with it, but that is not a software-dependent problem. You understand that. Hey, Stephanie. Okay, so we track volume created by institutions. Nope, on balance, on OBV, on balance volume, CMF and others are all generated, if you look at their formula, by price movement and volume. They come off your trading chart. We want an analysis that is independent of price movement. I like OBV, quite frankly, on a multi-time frame basis, but it is not as effective as this, which is completely split from any price movement on your chart. Now, to get a positive signal on OBV, you need a rising market. In this case, our indicator analysis, our in-market internals doesn't know what the market is doing in terms of price direction. It is far more powerful. And believe me, I looked a lot at OBV because I like that indicator. You do not need a level 3 because really all you need to know is what institutional money is doing. And if you want to chase the tape or you want to look at level 3 information, I'm telling you, it's going to lag price. By the time that level 3 information hits your eyeballs and is processed by your brain, price will have already moved. You need to predict what price is going to do before it does it. And that's what the system allows you to do. You do not need level 3 data. And I'm telling you, you don't need OBV, CMF, or any of the others. If you add them, they will in no way increase the predictive value of the trade. In fact, they may stop you from getting winners and walk you into losers. So I'd stay away from them. That is my humble opinion. It's a good future. I'm going to show you the futures today, WL, with a live chart. I mean, it's all well and good to show you JPEGs. I'll show you the Nasdaq today if you want to see it. And I think your jaw is going to drop. I mean, I think you could have made about 250 points. That's 1,000 ticks today on the Nasdaq. And we are going to look for losers as well as winners. Well, listen, Unorenco bars I really like. You're going to get them with the system. We have our own Unorenco bars we engineer here in the office. But it's up to you. You can trade futures on a time-based chart as well. And some people trade a 5-minute on the futures. You will still get great entries. Does not matter. This is a force that is independent of the kind of candle you trade or the time frame you trade. Hi, Mark. I already brought the Market Internals Dominator System when you last presented it on Traders Corner. I really like the system. The first system used boxes, and the examples you showed using the boxes only had 1 or 2 trades a week, but they were clear winners for a lot of points. Also, it kept you out of bad trades and out of chop. Now, this new arrow version trades a lot more and is not getting as many points as the boxes do on a 5-minute time frame. Since the system uses the boxes, okay, these are very long. Hold on a minute. No problem, Jeff. If you like the prior system, we will be more than happy to provide it to you. Either system is yours. If you like the other system, we will keep you on the box system. Not a problem. Okay? And we can give you the box system without any freezing. Sergio has fixed that problem. Okay? Does your software analyze size of trades, the big boys, oftentimes placing large trades? Well, Stephanie, listen, it's looking at institutional money. If there's a tremendous amount of institutional money present on the trade, obviously it's going to drive the market internals. Now, listen, how many times have you heard analysts talk about market internals? Number of stocks hitting 52-week highs, number of stocks hitting 52-week lows, number of stocks trading above their 200-day moving average, number trading below your 200-period moving average. These are all different forms of market internals. We're looking at the ones that are important to leverage on a candle-by-candle basis to trade. But all of those are different ways of assessing market internal information. Now, if the big boys dump enormous amount of contracts on one stock, it will register on your scanner. That's why you need a scanner. What will happen to it? Relative strength of that stock will skyrocket. The scanner takes into account relative strength, but it also takes into account all the market internals data. So it's going to come up as a blip in a green. You're going to run it and you can take that trade. So that's a great question. And I'm telling you, I can show you some trades that I took on that kind of analysis where I made some of my biggest money. The last one was Revance. I'll give you the ticker. Let me find it. It went up like a rocket ship. And we were in the trade. And the ticker is, because I traded it, is RVNC. You take a look at it. at your leisure, and you'll be really shocked at how this thing went up like a rocket. Now, it went up last week, and man, did it climb. And there was another one that we also caught. It was AMLX, Amylyx Pharmaceuticals. The stock went up 50%. That's it. It went up 50% in one day. We caught that as well. So that is extremely important, Stephanie. Do you look at options activity? No, we don't. We just don't. I think that we look at enough to provide us with sort of a proxy for options activity, Stephanie. And I think it's more, the overall assessment is a little more powerful than that. Now, I'm going to show you how in the master classes to leverage a little bit of options activity. I didn't really want to get into it. It's a little more complex. And for traders like you, we look at open interest, we look for gamma squeezes, we look for ways to leverage options in our favor. We're going to do all of that, but we'll only do it when the market internals are with us. We must have that metric training in our direction, and if we do, the likelihood, say, let's say a gamma squeeze or a tremendous increase in open interest on one side is going to work for us. You're very, very smart options trader, Stephanie. I can tell right off the bat. When is the scanner? Scanner should be released early next week, Jeff. No problem. You're going to get it. Trust me on that. Sergio's killing himself on it. Believe me, Jeff. I flog him with a wet noodle every morning, and he's working really hard on it. Hey, Stephanie, how you knew it was small fry retail? Simply because of the skyrocket in relative strength. All of a sudden, the stock gained tremendous RSI. And along with the fact that it was trading with the market internals, that's a stock that's going to signal on your scanner. Now, once it signals on your scanner, you're going to pop the chart. When you pop the chart, if it's set up with a triangle, it's sitting right on the 15. The 50 and the 15 are green, and it's trading right off support. You're going to take the trade. Your risk is exceedingly small, and your upside, potential upside, is huge. And isn't it all about risk to reward? You know, you're going to set your stop tight, and I'll talk about ATMs and our automated, you know, your stop in the master class. I mean, you're going to look for literally a 25-to-1 risk to reward on a play like that. And I guarantee you we don't miss them, Stephanie, because I get them, and I send them to you. You're going to see that you're going to get them from me. If you miss them, I'll send them to you. Does it integrate more closely with any? No, unfortunately, Stephanie, we have to trade NinjaTrader 8, and the only reason is it's the only platform available in the market that allows us to integrate the market internals data feed. There's no other platform. We've looked at TradeStation, MetaTrader. We have a huge platform on thinkorswim called the Compass Trading System. They do not make these metrics available, so we're stuck with NinjaTrader 8. But here's the caveat, or the good part, actually. If you don't want to trade NinjaTrader 8, we're going to download a demo of NinjaTrader 8. Costs you nothing. We're going to hook up the kinetic data feed, and all of a sudden, it's going to go alive. So you're going to take the signals on NinjaTrader 8, but you're going to trade them on whatever platform you like. That's how David Weiss trades. He trades off of thinkorswim, but he looks at the dominators, signals, to help with his trades, and they are tremendously advantageous. Right now, that's how Craig trades, because we don't have the system integrated yet, fully integrated. So it's not a big deal. You can really trade with any platform you like. Hey, Edward, do you have traders using this who are prop? Yeah, well, Edward, we have people all the time who are looking to, you know, trade Top Step. We get them through. I'm telling you, I pay special attention to them. I will baby them and nurture them. We want you guys to become a funded trader. And we have an enormous number of funded traders in the room. So you just let me know. I believe prop trading is trading through a funded account. You let us know that you are, and we will sort of asterisk you, and we're going to watch you closely. And we want a lot of feedback from you every trading day. I want to see your back end. I want you to download your trades for me. I'm going to critique them. I'll send you back the critique every single day. I want you to pass it on the first try. Hey, Donovan. I'm a current user, and I've been very happy with the software. Is this an upgrade? Donovan, don't we always give you the upgrades? We've been doing it for 10 and a half years. You will get the upgrade, just like everybody else. It's just not ready yet. It will be ready on Monday. We always do that, Donovan. If they already have the Unorenko series, how does this differ? It's very simple, Our Unorenko candles, I can't show them to you here simply because of time constraints and the fact that Trader's Corner is going to throw me out. Our Unorenko candle, I'll show you on the Nasdaq chart, and I'll show this to you very briefly, have internal wicks. Now this should be, let me see if this has our Unorenko system in it. It doesn't, we don't have but what we really have is a transparent candle that shows the wicks. No Unorenko candle creates wicks except ours. And just look at this trade on this break of resistance, on this buy, sell, imbalance zone. Look at this trade up. Now you see this 15? As long as this 15 stays green on our automated ATM, you're going to stay in the trade. Your entry is going to be here. Every candle has a signal. You do not leave. This 15 stays green. Then this 15 goes yellow, and the trade closes right here automatically. So this is what you're going to garner on this trade. I'm going to just try to get it one tick above. It's pretty close. You don't get the top. You get 48 points. That's close to 200 ticks on this trade that occurred about 1 o'clock in the afternoon on the Nasdaq. Now, if I go through this, here's another winner right here. Here's no trade. Here's no trade. Here's no trade. We don't have the internals. Here's your short trade. These are winners. Here's another winner. You need three. But you don't have no trade here, no background color. Look at this short trade. Huge move to the downside. This is another 25-point trade. To the upside, look at this move. Most conservative entry is right here on green background. If you want to be a little riskier, and remember the software's job is to define risk, You can enter here. Blue is not quite as powerful. You're going to make more money, but also your chances for success are slightly lower. Gorgeous trade to the upside either way. To the downside, you're trading into too much resistance or support here. I wouldn't take any trades here. Here, you could take a trade right into support. This is a tough trade. You cannot trade through resistance. And this is not dark pink. Another winner right here. Another winner. Now, this one's a tough trade. This might be a loser. Here's a trade on a break of support right here. Another big winner. I mean, I'm telling you, I looked through the Nasdaq today. I mean, I never saw so many winners. Right here, a little riskier because you have light pink. Go to dark pink. Still have a tremendous trade to the downside. Out right here on a change in color of the 15. You know, this is a 25 or 30 point trade. Look at this move to the downside here. You want to trade short under the VWAP. There's our VWAP right there. It's yellow. Right there, down you go. Out right here on the change in color. I mean, I can't even count the number of points you would have made today. And I mean, we trade this live. I don't know how much money Craig made today, but he made a ton of money in the live trading room. This is a tremendously valid system, and you can see the signals. This is a live chart, not a JPEG chart. It's offering the software, Stephanie, the trade scanner, and the trading rooms. All of them come with this offer. I didn't put that on the slide. I should have. That was my mistake. All three of them come. They are. Their scanner is there. The master classes are there. The software is there. I should have added the live trading room. You do get that. There's no way, Stephanie, we would give you the software and the scanner and not put you in the live trading room. We just don't work that way. We want you to trade with all of us. I mean, in our big trading room, we have 550 traders. In David Weiss's room, we have 150 options traders. We have a lot of traders. Okay? No, check in money flow. I actually, I knew it. I just didn't say it because I didn't think many people in the trading room knew what it was. I think the check in money flow, honestly, Stephanie, I'm not overly impressed with it. And that's just my opinion. I like OBV a lot. I don't think CMF is that great, but that is just my opinion. And you know what? Everyone has an opinion. But irrelevant, all these indicators don't work because they are stuck using price on your trading chart, and that is never going to get you where you want to be. Trust me. Chicken money flow and OBV have been around for, 25, 30 years? They don't make anyone any money. And I'm just telling you the way it is. I wish they did. And I'll tell you, if they did, we'd use them. Understood, you're looking at pure volume. But I am still curious if you look at size of trades. We don't, Stephanie. But I'm telling you, they're going to pop the scanner. You're going to see that. Because when a huge trade is going to cross on a level 3, that is, it's going to affect the market internals, and you're going to see that stock stick out, and it's going to flash you a buy on the scanner. If it's on your scanner, it will pop. I'm telling you that. That's how I got Revance, and that's how I got Arcutis. And Arcutis was up 50% in one day. Hey, Robert, can we order online? No, you can order online. Rory, is the link in the room? No, he wants to order online, Rory.
Yeah, the link is in the chat.
Robert, the link is in the chat box. Rory will also send you an email with it. So you should be able to come aboard easy. And we welcome you aboard. And I'm telling you, we're here to support you educationally all the way. And I am eminently around. I'm around all the time. We're going to become really good friends. Hey, Stephanie. Let me ask a different way. How do you discern high volume retail traders versus institutions? Very simple, Stephanie. It's simply my thesis. Now you can believe it or not, and either way, you're obviously a very informed and very, very bright lady. But small institutional traders do not have enough money to create a blip on the chart. You need some institutional participation. Now, occasionally that is not true with a micro cap stock. With a very, very small, thinly traded stock that, say, might be moved by the Reddit message boards. You know, those meme stocks. They are simply outliers, and that's not the way we trade. So, you know, if you have a 25-cent stock that a whole bunch of traders pile into, maybe we won't get that signal. But we're going to get the majority of big trades that big institutions participate in, and that the momentum guys start piling into, that really amounts to an appreciable power to drive uptick and up volume. Even on that individual stock, if it does, relative strength will change and the scanner will signal it. Okay? But you've got to have significant participation, and you know, you're going to miss some of these little Momo trades. And I'm telling you, you have a chance for that happening. But I'm telling you, that's not what you need to make an enormous amount of money. Okay? Hi, Mark. This is Miami. Hey, Chuck. And joined as a new member. Thank you so much for coming aboard. Looking forward to trading. It's great to have you. And also, Alicia, thank you for coming aboard. Mort, thank you for coming aboard. Janice, thank you for coming aboard. Thank you guys and ladies so much. Hey, Robert. Our system is really tooled for NinjaTrader, Robert. That is the premier platform that we trade. It's the only one that allows us to take these signals. I showed you the Nasdaq. It's unfreaking believable today. I mean, if you didn't make 100 points today on the Nasdaq off of this system, you got to go stand in the corner. Okay, I'm not sure your question, WL. Okay, Robert, Rory said that the link is in the chat. Rory, a lot of people don't see the link, Rory. Okay. Thank you. Hey, Al. Well, listen, media faces can mislead us, WL, but money doesn't mislead us. And that's what we're tracking, institutional money. I mean, if they're driving price, that is what we're going to follow. That doesn't mislead us. I couldn't give a hoot what Jim Cramer says on Mad Money. I don't listen to that show anymore because he drives me insane. There's a few very, very brilliant people on YouTube, and he is not one of them. Hey, Jeff. Sure. Hang on one second. I just have to retool the chart because I got it on stocks. So give me one sec. All right, hang on. All right, okay, listen, Jeff, I just don't have time. I would be happy to do it. I just don't. I mean, they're kicking me off, or I would be more than happy to do it for you. The software works in Canada, Jay. No problem. Okay, Derek. Ninja Trader 8 is great. It's the best, Stephanie. I mean, really. Hey, Bob, can you just confirm price offer include? Listen, I'm telling you out loud on video that the $997 includes the trading room and the market scanner. So you heard it. And believe me, if I say it, and this is a pre-recorded session, Traders Corner is recording it. And I don't have any control over it. You're going to get it. And why would I mislead you anyway, Bob? You're gonna come trade with us. Hey, Edward, how long will we have access to the trading room with this offer, Edward? You know, we'll give you 2 months in the room for free. After that, there'll be a nominal charge, but let me tell you, for 3 trading rooms, it's really very small. Okay, Robert, we got your number. We will call you. You think the trade rooms are included for, no, it's not included for life. Chuck, I gave you 2 months. After 2 months, there will be a recurrent charge. It's only $129 for a month for 3 rooms. That is really a small fee. So we're not looking to gouge you at $299 or, $175 per room. $129 for 3 rooms. So that's really inexpensive. And remember, the software and everything you get is yours for life at no charge. Stephanie, it's my pleasure. And you're a very bright lady, Stephanie, whether you come aboard or not. I think you're going to be a very successful trader. I really do. I think you know from where you speak. And, you've honed in on some nice, and like I said, I love OBV. Hey, Bob, auto trader upgrade. Auto trader's included when we get it, Bob. Okay? It's coming. I didn't mention it, but eventually we're going to automate it. It will be included. Okay? Thank you so much, WL. I really appreciate that. That's very kind. Okay? Alberto, just call Sergio. He will set you up. Okay? And last question. It is included. You heard me say it. I said it's being recorded. You're going to get the auto. And let me tell you, that's an enormous piece of software and a lot of work. And I'm only giving it to you guys in the trading in this room now because this is Traders Corner. So help me. Everybody else who comes aboard is going to have to pay us a separate fee for that auto because we're killing ourselves on that automated system. So this is a great opportunity. And I just really, at the bottom line, I really want you all to be successful. In a world where there's a lot of cynicism and a lot of scammers, we really do care about you. And the only way I could go to sleep at night was to know that what I'm offering you is effective and it works. I mean, I don't know how these other people can sleep. I sleep fine. The only thing we need to do is provide you with some discipline and the education you need. So I thank you all for giving me your time. I really appreciate it. I will work with all of you who come aboard. Anyone who's a prop trader, I will help you guys or you ladies personally if I need to. I wish you all the best. And again, I know it's a long day. You take care. You be well. And have a great evening. I look forward to seeing you in the trading room. Bye-bye, everyone.